Community and good afternoon, board. Let's call this meeting to order at 3 p.m. for the Police and Fire Pension Board. City Clerk, or excuse me, slightly out of order. Let me go ahead and do. Oh yes, City Clerk, roll call, please.
Member Alternate Leduc.
Yes, present.
Member Alternate Welch.
Yes, I'm here.
Member Alternate Smizer.
Here.
Mayor Lopez.
Here.
And I'm here.
Thank you, City Clerk. I'll now read the land acknowledgement. The City of Albany recognizes that we occupy the land originally protected by the Confederated villages of Lishan. We acknowledge the genocide that took place on these lands and must make strides to repay the moral debt that is owed to this indigenous people, specifically the Ohlone tribe. We thank them for their contributions, which have transformed our community and will continue to bring forth growth and unity. The City of Albany commits to sustaining an ongoing relationship with the tribe and together build a better future for all that now make this their home. Moving on to item number 2, consent calendar. Items on the consent calendar are considered routine and can be enacted by one motion unless anyone on the board or in the public chooses to pull an item. Do any members of the board wish to pull any item from the consent calendar? Do any members of the public wish to pull an item?
No members of the public.
Thank you very much. I'll go ahead and request to move the consent calendar for approval. Looking for a second.
Second?
Thank you very much. City Clerk?
Member Alternate Leduc.
Yes.
Member Alternate Welch.
Yes.
Member Alternate Smizer.
Yes.
I vote yes, and Chair Lopez.
Yep. All right. Moving on to item number 3, public comment. Do we have any members online? And we have no folks present in person. So that concludes public comment section of this meeting. We'll now move on to item number 4, 4-1, Dewey 2's of CIBC presenting investment report for quarter ending June 30th, 2025. Dewey.
Thank you. Good afternoon, everyone. Can everyone hear me all right?
Yep.
Okay. Thank you for the time today. So I will go over the review of the investment portfolio for the quarter end June 30th, the second quarter of 2025. I don't see the report on it. Do you want me to share the
Since you're
screen of the report?
Since you're online, it'd probably be best that you share. Then you can
Okay,
control it.
got it. Let me do that. Can everyone see it all right? Okay. So this is a summary of the portfolio at the end of the last quarter, quarter 2, June 30th, 2025. This is the current allocation, basically how the portfolio is invested at the end of the quarter. There's $20,000 in cash, about $1 million in bonds, and $1.2 million in stock. Total value of the portfolio at the end of June was $2.238 million. So just to remind the board, this portfolio is invested with a balance objective, so with a balance of income, fixed income, and equity. Last quarter, at the beginning of the quarter, we have a fairly balanced portfolio with a significant sell-off in stock, but at the end of the quarter, stock has rallied significantly versus bonds, so we are slightly overweight in stock versus the target benchmark. This page shows the change in market value for the last quarter. So at the beginning of the quarter, the portfolio started with $2.479 million. $300,000 was withdrawn, sent to the operating account. At the end of, $22,000 was the income generated from the investment. 37,000 was the gains from the investment in the portfolio, for a total return of $59,000. So net of the withdrawal, the balance at the end of the quarter was $2.238 million. This is a change in market value since inception. So since we started managing the portfolio in 2009, September 2009, the value of the pension fund was $10.9 million. Over the last 16 years, $15.5 million has been withdrawn. Total income generated was over $2.57 million. And the gains was roughly $4.28 million, for a total return of $6.8 million. And net of the withdrawal, that's the balance at the end of the quarter for the pension account. In terms of performance, so year to date, the portfolio generate 5.38%. Over the last 3 years, average return was 9.7% annualized, and since inception, it's 7.23%. Now, just to note, the number in the last 3 years, this is comparing to the value at the end of June 2022. So if you remember, 2022 was a year where the stock market went down significantly, and the depth of the sell-off was in the middle of the summer, right around June of 2022. So when you started, comparing where we are today with the value of the portfolio back then, average annualized return from the bottom in 2022 is pretty significant. So that shows in the 9.7% return for a balanced portfolio of bonds and stock. If you look at the last 3 years number in terms of the investment, the bond fund generated roughly 4%. The stock fund generated 14.5%. That was when you average out, that was the average return for the portfolio with a balance objective. So far this year, you could see year to date, the bond funds have done well, thanks to the rate environment, but stock funds has done better as well. And I'll go over kind of the investment theme and summary of the last quarter, but the numbers that we talked right now comparing to the previous quarter where I presented to the board was a significant contrast. Last quarter we had a kind of a significant sell-off at the end of March going into April. Market has recovered very well so far this year. Is there any questions that I can address before I go over the market outlook and the economic environment?
No, we're all good. Continue. Thank you.
Okay, so just a look back so far this year. Year to date, U.S. stock was up 6%. That's the S&P 500. International stock was up 19.5%. We don't have international investment in the pension portfolio, but just to give a reference, even though international stock has done very well this year versus U.S. stock, the trailing 5-year period, if you look, average U.S., the S&P return 16.6%, and international stock return only 11%. 11% is still a very respectable number on an annualized basis over a 5-year period, but still about 5% annualized, trailing behind the S&P. Bonds, we invested in intermediate corporate bonds, so right around 4% year to date, and trailing 1 year is about 6%. over a 5-year period, because of the rate change in rate increase over the last 4 years, the return on bonds average over the last 5 years, intermediate corporate bonds and government bonds have been muted. So next page is our investment themes for the next quarter, what we see the last quarter, and our outlook for this coming quarter. Just to kind of refresh, at the beginning of April, President Trump announced a reciprocal tariff, and that created kind of a panic sell-off in the stock market. That investor was pricing out the worst case scenario for stock and trades and economic growth. At basically the first week of April, market was down, at the depth of the sell-off was down 15%. The White House ultimately reversed course and delayed the implementation of tariff. Even though they capped the 10% baseline tariff, they delayed the reciprocal tariff, and that sent the market on a really strong recovery. Over the last quarter, since the depth in April, market has gone up about 20%, 25% to get back to previous high by the end of June. So that's kind of set up where we are today. Our view is the backdrop of the economic outlook has been a slower growth environment. We have been talking about this for the previous few quarters, that there are signs of economic slowdown, slower job growth, and slower consumption or spending growth. But that doesn't mean that this is the environment where the economy is heading into a recession. We don't think the recession is in the card. It's more of a normalization of a labor market that has been high on stimulus for quite a while, and it's just a normalized economic condition. So we do believe that slower growth is expected in the second half of this year. But with that, where we are in the stock market, valuation is pretty expensive considering where stock has rallied from the low in early April. The positive things, though, is even though the baseline tariff was implemented, it has not affected much in terms of inflation data. So the Fed right now it's basically inflation is supporting the Fed to cut rates. The Fed chair's been on the news saying, he wanted to see more data, and looking likely if inflation remains tame for the next few months, the market is expecting the Fed to resume rate cuts sometime in September. With a slower labor market and tame inflation, that's very productive for a Fed rate cuts. On the other hand, stock has been quite expensive going into this year. So right now, where we get back to the previous high, valuation remains quite stretched, and we believe that there's some volatility ahead before the Fed start cutting rates. Otherwise, international stock continue to perform well. In terms of the U.S. economy, I talked a little bit about the slowdown earlier, and our view is this is a normalization environment. On the labor market, slower job growth is expected, and that could lead to lower or slower growth in consumption in the second half of this year. And it's we look at the Fed guideline to expect in terms of inflation right now. Inflation hasn't shown up in tariff hasn't shown up or caused a significant rise in inflation. That shows U.S. producers or U.S. importers were able to absorb a bit of the tariff. We have to see whether they can sustain that. If that's the case, that's going to hit into the bottom line in profit growth. Otherwise, it's going to show up in inflation, and that's where the two numbers or the two data that we pay very close attention to. In terms of trade policy, the tariff actually increased has benefited the U.S. Treasury. Now, this is a very short term because importers brought in quite a bit of imports, and with the baseline 10% tariff, this goes to U.S. Treasury. But right now, as I mentioned before, importers have not passed much of this, and that they were able to absorb the increased costs from tariff. We have to wait and see whether that's going to show up more in inflation later. If they're willing to forego some of the profit, that could maintain kind of a tamer inflation. Otherwise, we expect inflation to come up quite a bit. I'm going to skip this page. Global bond. In terms of U.S. equities, as I mentioned previously, going into this year, stock valuation was quite expensive. So with the sell-off in April, valuation became a bit more attractive. But since the low in April, stock markets rally a lot. So 20 to 25% up from the bottom. Where we are today, the forward valuation, so price to earnings ratio for stock, the S&P, is quite stretched, and it's on a higher than the 20-year average. So to us, it's not an attractive environment for stock to continue to this rally. We do expect some volatility ahead in this quarter or heading into the next quarter. We don't have international investment, so I'm going to skip these pages. But I have quite a few clients asking about U.S. dollars, so I just want to address quickly to the board. We don't have a view in terms of where the dollars will be. We kind of laid out our hypothetical bull case for the dollars and bear case for the dollars. So you can argue there on both sides. There's a bull case for normalization, the dollar strengthened again, and on the bear case, because of the debt and deficit in the U.S., there's a longer-term bear case for the dollars. Our view is it doesn't really affect. Long term, it doesn't have a fundamental effect on stock. So we're not taking a view in terms of where we see the dollar going forward. And that's pretty much the summary of the report today. Any questions, concern?
All right, thank you. Do we have any questions from members on the board? Not seeing questions from members on the board. Do we have any questions, comments from members of the public? Bringing it back to the board for discussion. Do we have any discussion on this item? And to my knowledge, this is an information-only item, so no actions required. With that said, thank you very much for your update and presentation. Deeply appreciated and always well informative, as always. That said, we will move on to the next item on the agenda, which is
Great, thank you.
Oh, thank you. Which is item 5, 5-1, annual payment update for board approval, and I will defer to city staff on this.
Good afternoon, board members. We are seeking board approval today for the annual service retiree payment calculation adjustments. Each July, the city recalculates service retiree distributions for the upcoming fiscal year. The calculation is based on the average pay for the last 3 years for the rank at which a member retired, applied against the applicable percentage allowed, determined by years of service. The rate is effective from July through the following June, so from July 1st, 2025 to June 30th, 2026. The 3-year period that applies to this calculation is from July 1, 2022 through June 30th, 2025. No adjustments will be made to the new pension amount. They will remain in place for the entire fiscal year. And we've outlined the effective applicable MOU changes during that 3-year period, and draft calculation letters are attached to the memo. That's all I have. Yes.
Thank you very much. Do we have any questions from members of the board regarding? Nope. Assuming none from public, I'll bring it back to the board for discussion. Do we have any discussion on this item? And I believe this does require a motion, correct? All right. I will motion to approve the annual payment update. I will look for a second.
Second.
Thank you very much. City Clerk?
Member alternate Ledoux,
Yes.
member alternate Welch,
Yes.
member alternate Smizer,
Yes.
vote yes, and Chair Lopez.
Yep.
Motion passes.
Thank you very much. And with that said, we move on to item number 7, adjournment. Thank you very much. Our next meeting will be October 28th, 2025 at 3 p.m. Have a good rest of your afternoon, folks.
Thank you. You too.